Here is a pretty much similar scenario to the EURUSD multi-timeframe analysis approach that we did yesterday. So if you haven't seen that video, you can watch the previous one and you would understand better. Now, it's similar, but yet still different in the sense that in as much as we are doing a multi-time frame analysis approach, things will look pretty different on, time frames. Let me explain. Now, look at this guy on the daily time frame as an example. What is the trend? Clearly, a no-brainer. It's an uptrend, right? And since we're talking about multi-time frame analysis approach, by the time you decide to drop down in time frames, you might start to see things slightly different. Okay, 4 hours still looks up. 1 hour. Now you can see what 1 hour is looking like, right? So just to give you a heads up that you must understand exactly what you're looking out for. And that's why when you start from the daily time frame, you must be able to build or to have a bias, directional bias. This directional bias here is to the upside, right? Clearly, it's a bullish trend. But at the same time, price needs to retrace. Price needs to pull back to certain areas. It's all about knowing the area of interest if you're going to be a counter trend trader on this particular trend, or the areas of interest if you're going to be a trend trader. So looking at what we have right in front of us from the daily time frame, we'll spend a few minutes on the daily time frame. Why? Because this is where we are starting our major analysis from, and then you can drop down in time frames for I always prefer dropping down in time frames for one major reason, and that's to get a discounted entry. Discounted entry, meaning that if I was going to enter this trade on this daily time frame, what do you think the stop loss would be? The stop loss could easily, this is gold, by the way. So gold stop loss is usually heavy, but I'll just say this. On the daily time frame, let's assume the stop loss is like 200 pips. I'm just giving you an example. 200 pips. And then the take profit is 400 pips. That is a ratio of 1 to 2, right? Stop loss 200 and then take profit 400. No, by the time you drop down in time frames, whether it's 4 hours or 1 hour, 30 minutes, or even lower. Please don't forget the lower you drop down in time frames, the noisier it gets, especially when it comes to the scalper's time frame, which is like 1 minute, 5 minutes, or maybe even 15 minutes as well. But then, assuming you can drop down to maybe 5 minutes or whatever, and you know what you're looking out for. And then you get a discounted entry, which happens to be like 20 pips. Let's assume you get something on 20 pips. So you get something on 20 pips. Now answer this question. For the 20 pips that you have gotten for that take profit, for the same take profit area of 400 pips, what is that? That's at a ratio of not 1 to 2, but rather 1 to 20. Is this a good trade, or what do you think? You won't even say it's a good trade. You say it is a fantastic trade, because how many of these do you need in a week or a month or even in a year? Assuming you're using 1%. 1% simply means it hits your take profit on a daily time frame. Of course, it means you're going to have to wait a bit for it to materialize. And then that simply means you have just done 20% on returns, right? Reward, which is fantastic. But then don't forget, the lower you drop in time frames, it gets noisier. So you might have some failed attempts. But don't worry, I always say, and this is the general thing when it comes to trading, always ensure that your winners are runners, and then your losers, you cut them short. Simple. So your risk to reward ratio also has to be, of course, the reward has to be well higher than the risk so that it makes sense at the end of the day. So look at this chart over here. We've marked out some key areas that we can easily call, like here, resistance, support. So I call these flips. So flip zones are where, has acted as support and resistance in the past. Here we had this as resistance. It didn't quite get there, right? So this I'll target as untested. Here you can see resistance nicely tested over here, flip zone. Same thing here, nicely tested. But then as the trend is up, like if you're a Fibonacci trader, you know you're going to be drawing from the lows here to the highs. That means that there's like room for a major pullback, right? Now, as it's doing a major pullback, you need to be able to identify those areas of interest, which is what we have done over here. And then you want to enter to sell as a counter trend trader. Which areas are the ones to look out for? Here we have it as a resistance. So if price gets here, it becomes a double top. But here we have this as a supply zone. I'll just put SZ, right? Abbreviation for supply zone. So we have this as a supply zone over here. You can see price has tested it. So that means that this is a good area. Here is a good area for shorts. Just in case this video is a bit late for you to watch, uh, as I always say, you do an update from today being the 3rd of June. You do an update, whether it's 10th of June, a week from now, 2 weeks from now, and see the reaction over here. Here is a very important and, key area of interest where we're expecting price to drop further down. Can see we have been on the daily time frame for a while, and there's a reason to that. Once you do your initial proper analysis here, and then you drop down in time frame, let's start with the 4 hours time frame. You drop down to the next lower one, 4 hours. It now gives you further clues here. Some of you might be saying, hey, but wait, Tolu, I can't see the candles. Okay, for the candles now, for me, it's much better when it is time for entry, because now you can do what? Now you can zoom in and see the candle formations that might give you better heads up. Now look over here. This candle swallows the previous one. So you could say, oh, this is an engulfing. That means that I can easily use this candle for entry. And you can see that the entry would have been here, which has gone down a bit. It's still not too far from it. That means that you can still pull the trigger, have your stop loss somewhere here, right? That is assuming you have missed this. Please, a quick disclaimer. If you're going to be taking any trade that I talk about, assuming you watch the video on time, if you're going to be taking any trade, make sure you know how to calculate your risk appropriately based on your account balance. Gold is a mover. You cannot be trading with $100 or maybe something less than $100, and then it moves 200 pips, 300 pips against you. It might probably knock you out before it can get to good areas of profit, right? So please pay attention to that. That is a quick disclaimer for you. Take the trade, don't take the trade. But if you're going to take the trade, understand your risk management, know where to put your stop loss. Of course, ideally, your stop loss should be above that candle that triggers you. But because you might be looking, oh no, that distance from the entry to the stop loss is, let's say, 100 pips. But trust me, gold will probably be more than 100 pips on this time frame, 4 hours. But let's just use 100 pips as an example. So you say, oh no, my stop loss is 100 pips. I don't want it to be 100 pips. I want it to be 50 pips. And then you put your stop loss somewhere in between. It's very possible that the trade could push higher, knock you out, and then drop further down. Because I'll tell you this area that we're looking at now from the 4 hours time frame, I can tell you if I was going to be looking at this, right, I can see like a pattern here. My hand might not be too straight, but I'm going to draw like a flag pattern, like a channel over here, where we use this point and this point. And then I could just simply copy and paste this. But of course, I'm drawing it with my hands. Me doing copy and paste, it simply means it is now going to look something like this from this point, and I can also use this point to do another one for an extension. I can see this is what we have over here. So price should get to this point, right? If the trend line, if you obey the trend line, it should get to this point here and then react accordingly, right? But if you haven't gotten a trade, wait a bit, it might still push higher and then give you something for you to even get a better discounted entry, maybe somewhere here and the stop loss is here. That would be much better for you compared to pulling the trigger below this engulfing. Now, this is just an entry, right? There are different ways to enter the market, and the choice is yours at the end of the day. You could use chart patterns, you could use candlestick patterns, formations, or whatever. Now, let's drop down another time frame, which is 1 hour, and let's see what's happening there. Beautiful. Now, this is the 1 hour time frame. Now, this 1 hour time frame. Hmm. Now, what is jumping at me now? Based on this move that we have over here, I'm just going to circle it. Based on this move that we have here, I could do something, right? I could do, why don't I put a Fibonacci? Let's draw a Fibonacci from these highs here to these lows and see how it retraces. Okay, so we have this in this manner, and then we're like, okay, now it has retraced 38.2. This is not a bad place to enter, meaning that I enter here, stop loss above 61.8. Or I enter if it gets to 50, stop loss above 61.8. Or if it gets to 61.8, I enter here and stop loss still above 61.8. You can see that the higher it retraces based on the Fibonacci levels, the better for you based on the stop loss values, right? But you must have a reason for pulling the trigger here, here, or here. Or if you want, depending on you, it could even be a touch trade or whatever the case might be. But this here, you can see now we have dropped down to the hourly time frame. And I'm going to stop here for the sake of the length of this video, one, and then also I don't want to go much lower to like the 5 minutes time frame and end up confusing some people. Trust me, the lower the time frame, the faster things happen, and the how will I put the English? And the easier it is for mistakes to occur. Trust me, I've been there. And that's why when I start with the higher time frame analysis, I take my time, I draw that up, I wait for price to get there. I could set price alert, price gets there, my system, bips me that price has gotten to an important level. And then what do? I check on it, do further analysis, drop down in time frames, and then I know what to do in order to get my entry, put your stop loss, take profits, and not just everything that has to do with entry and exit. Trade management is also very, very important. You can decide I need to close a particular percentage of my trade when it gets to a particular area, or I need to move to break even at X amount of pips or at a particular ratio of your stop loss and so on. Now, if everything that I'm saying right now is a bit confusing to you, let me know. You can reach out. I have a mini course for beginners that could help you to understand the price action better, help you to understand trade management better, and so on. Or if you're interested in maybe a one-on-one session, let me know. Reach out, and then we'll see what we can do to work together. Trust me, I'm here to help you. If you have any questions, use the comment section below. Ask your questions. It doesn't even have to be about gold. It could be about fiber, EURUSD, cable. It could be about the cryptos, Bitcoin, and so on. A lot of people are into cryptos. And trust me, this is what I'm going to say. Whether it's the cryptos or the forex market or the stocks market or whatever market it is still following the same rules of price action. Do your research, ask around, check on different charts. If I were to paint this now, if I was to paint this, meaning that you can't see the name of the instrument, right? That means that what? You don't see the name, you don't even see the time frame. But looking at this now, assuming this here was Tesla, and we've just talked about Tesla, it's still the same price movement. We're assuming here is S&P 500, or it is the Bitcoin, Ethereum, Ripple, Dash. It doesn't matter. Once you understand, I'll give you this example. I use this a lot when I train people, when we are in like training classes, sessions. I say, do you drive? And then some of you might say, yes, I know how to drive. And then I ask them this question, what car do you drive? And I say, oh, I drive a Mazda, I drive a Benz, I drive a Toyota. I say, okay, good. So you drive this car, Toyota. And I say, can you drive a Benz? Yes. Can you drive a Nissan? Yes. Can you drive a Tesla? Yes. What does that mean? Because you know how to drive, Whatever vehicle you get, you can drive it. Even if it's a salon vehicle, or it's a bus, or it's a this, or it's a that, trust me, because you know how to drive, you will be able to do what? To drive that vehicle. The same thing applies over here when it comes to trading. You know how to trade, you understand price action, you can trade any financial instrument whatsoever. And I'm going to be wrapping up now. So don't forget, if you need any assistance whatsoever, whether it's the course that's available for you or you need one-on-one, let me know and then we'll see what we can do for you. So we'll be back to give you further updates on this and even updates on the Euro USD from yesterday. Because if you check the Euro USD that we did yesterday and where it is now, you know that the same level that we marked up yesterday is already working. I'll give you more information, more updates as time progresses. Okay, guys, thank you for now, and I'll catch you same time whenever we drop the next educational or live market analysis video. Okay, thank you, and cheers for now. Bye.